Hello, everyone. My name is Guillermo Bermudez with another presentation on our job readiness class series. Today's class is going to be a financial literacy course. The title of this course is titled Bank on It. Let us begin. Bank on It, an FDIC financial education curriculum. The objectives of this presentation are going to be the following. We are going to identify the major types of insured financial institutions. We will identify 5 reasons to use a bank. We will describe the steps involved in opening and maintaining a bank account. We will also be looking or describing 2 types of deposit accounts. We will identify additional bank services that come with deposit accounts. And last but not least, we will describe the main functions of the bank customer service representative, a teller, a loan officer, and a branch manager. So, in discussion, what comes to mind when we mention the word bank? And what has been your experience with banks? Customarily, when we talk about banks, the word that comes to mind is money. And in experience wise, most people have had both positive and negative experiences. But in conversation with other customers, I have found that most people have had nothing but positive experiences. Every once in a while they do get a negative experience, but it's not a negative experience that it totally, they lose confidence in a bank. Unfortunately, some people just having their money in a bank is not a thing for them. But we are going to discuss today why it could probably be of great benefit to you to have a bank account. Now, like I mentioned, I've done this class in live and in person, and most of the people, I would like to say, 8 out of 10 people do have their money in a bank. The other 2 might have had a negative experience years ago, and for some reason they just did not go back to a financial institution. I did ask them, why do you keep money in a bank? Why would you even have a bank account? And these are the reasons they mentioned. They said safety was one of the main concerns or the main reason why they have their money in a bank. Having their money in a bank provides them some also sense of security, which is there on the list. So having their money safe in a bank is really important. Because they said they've lost their purse or their wallet and they would carry their cash. Unfortunately, that cash, chances are they're not going to recover that money. But when they lose their wallet or purse and they did not have their cash, they have their bank cards, they automatically call their banks and file a claim. And that money, whatever they had, even if the person that found that wallet or found that card uses a card, that money could be returned. Of course, proper investigations will be done, and that way to ensure the right money or there's no fraud. But most of the times, the money was returned if there was some illegal action that had taken place there. Convenience was another reason that people mentioned. It is convenient for us to have one, not to carry the cash, but 2, to have our bank card, our ATM card, and walk around with it. We can use our card anywhere. We could even use it online from home. So we can be shopping, doing our online shopping nowadays, especially with the COVID-19, where we don't want to go anywhere. We don't want to go to the mall shop, but we need to buy stuff. Christmas is around the corner, and maybe shopping or Christmas shopping is already being done. There's a lot of online shopping, so that is a convenience of having a bank account. The cost of having a bank account is minimal. Some banks do have fees involved with their accounts or their services, but a lot of times there are ways around those costs or fees. Just talk to your representative and let them know what type of service you're looking for, and they'll be able to provide you with the right information. And financial future is another one that people mostly mentioned, that having their money in a bank could help them in their future or has helped them in their lives. They were able to provide or obtain a home loan or a business loan, a car loan, a student loan for college, whatever the case may be. Financial future is going to be more secure when we have established a good relationship with a bank. So when we talk about banks or financial institutions for now, we think of banks. Banks are for-profit institutions that may be privately owned. Typically, banks have lower savings rates and higher fees. Also, they offer many varied financial products. Products such as checking and savings accounts, home loans, auto loans, business loans, student loans. Now, banks, all of these money and services are subject to federal and state laws, and they are FDIC protected. Now, to decide where to maintain your financial relationships, think about what's important to you and carefully compare the difference between credit unions and bank services. Let's look at credit unions. Credit unions are similar to banks. They're same as banks actually, but additionally, information that I would like to share with you guys is that credit unions are non-profit financial institutions. These are member-owned. They require a membership to open an account, and they often have higher savings rates and lower fees. Now, of course, because credit unions are smaller than banks, they may be more limited in the financial products that are being offered. NCUA, just like banks, that is protected by FDIC, NCUA, the National Credit Union Administration, provides deposit insurance. So shop around, look for banks, credit unions to see what the comparisons are on interest paid on savings loans or charges on loans and the individual financial institution's reputation. Perhaps a local bank or local credit union is better locally. So just ask your friends and family for guidance. There is a third type of financial institution that has popped up in the recent years. By recent, I mean the last 20 years. Online banking. Online banks can help you earn a high rate of interest and keep fees low. They also tend to provide user-friendly apps and tools that make it easy to manage your finances. Some examples of online banks include Ally Bank, Alliance Credit Union, Charles Schwab, and many, many others. So let's take a look at now how to open and maintain a bank account. So we will be looking at how to open the account, make deposits and withdrawals. We're going to take a brief look at how to record interest and fees, and we are going to be keeping track of balances. In order for us to open a bank account, we are going to provide the following information, if not other information as well. Identification. The bank needs to verify that this ID actually is the right person to be opening this account, and so they'll verify identification. They will need your social security number. They will also need your date of birth, of course, which is available on your ID, proof of address, and also, of course, the initial deposit. You cannot go open a bank account with zero money, guys. All right, so initial deposit will be required. Just to let you know, the initial deposit could be in the form of cash or a check. So we're going to deposit money into this new account that we just opened. A deposit is money that you added to your account. Like I mentioned, it could be cash or it could be in form of a check. So we will be using a deposit slip. The deposit slip is just a piece of paper that tells the bank how much money you are adding to your account. Note, you may not have immediate use of deposited funds until the bank ensures there are funds at the originating bank. So just don't think that just because you just opened your account, deposited that check, it is ready to be used for your online shopping. Not yet. Here we're going to take a look at the amount of money we have in our bank. So we opened an account with $100, and there we see it. We see the $100 and the balance of $100. We will now make a withdrawal. A withdrawal is going to be when we take money out of the account using checks, withdrawal slip, or an ATM. Make sure you always know how much is in your account before you continue or before you start spending money again. So we opened our balance or account with $100, and now we made a withdrawal. We used $20 for groceries or gas money, whatever. So now we only have $80. Some banks will have fees. These fees may include, some examples of them include monthly maintenance fees, penalty fees, overdraft fees. Just really briefly, monthly maintenance fees could be anything varying from you need to have 2 direct deposits per month, otherwise you get charged $5. Penalty fees could be you had $100 in your account and you spent, you wrote out or you paid or wrote out a check for $105. Well, because of those $5, you are now going to be charged with an overdraft fee. So your overdraft fee is that penalty that the bank charges you for having spent more money than what you actually had. So those $100 was not, or those $105 now turned to 100. Let's say they charged you $40, so $145. On top of that, the business that you paid it out to could also charge you some fees of varying amounts of maybe $20, $30. So be careful on, like I say, on the money that you actually have on your account and avoid those overdraft fees. So here we're going to have a fee. We're going to pay a fee of $4. Whatever reason that fee was, maybe it was a monthly fee, maybe it was, anything. $4. So instead of the $80 I had, now I'm going to be deducted. They're going to take away $4. So now I have $76. So when we make deposits, there are two different deposit accounts. One of them is going to be a checking account. A checking account is going to be that account that we use on a daily basis to pay bills and buy goods. That's where we pay for groceries, for dinner, for gas money, whatever it is, that it comes from your checking account. The savings account should be money that you are storing, you are saving it to save money and earn interest. Your savings account should not be used on a daily basis. You should not use it to pay for bills. It should be there under lock and key, so to speak, and avoid using it. Just remember also that you may have transaction and monthly fees. The bank will be sending you periodic statements, whether it's on paper or online. Just a personal note, I recommend that you do paperless or online banking. That way you avoid, wasting paper. And two, online banking, you will have immediate or up-to-date amounts of your money instead of having to wait for that monthly statement that you get, and it's not up to date because you've already used your card since that statement was printed out and mailed out to you. So if you do online banking paperless, you can always check on the app or online, so I recommend you do that. Let's take a look at having a bank account versus not having a bank account. So in this example, on the left side, we see check cashing services. Check cashing services are those places such as Ace Cash Express, I believe. There is another one. Maybe you cash your check at H-E-B, at Walmart, somebody told me at Narvaez Meat Market. Wherever it is that you may go, where they'll cash your check, they're going to charge you a fee. In this example, they're going to charge us $5, and we get paid every week, let's say. So every week I go to H-E-B, and I know it's probably cheaper, so I'm not calling out anybody in particular. So they go to the grocery store or the gas station, and they cash their check. Remember, $5 per check. That's 4 weeks in the month. That's $20 a month that you spent so that somebody can give you your own money, your hard-earned money that you pay, that you worked hard for. And so you continue this all year. So every month you're paying $20, $20. So in the whole year, you spent $240 so that you can get your money. And not only that, ladies and gentlemen, you have to pay bills. Of course, we have to pay bills. No, I don't think anybody lives on not paying the bills. So we are going to buy money orders, whether it's a money order for the gas bill, the water bill, the car bill, the babysitter, the rent, whatever. So we are going to have to pay with a money order because they don't accept cash. So I have to now go to the corner store, gas station, and buy a money order. This money order varies in prices again, and so for this example, it's going to cost me $1. So I have 5 bills to pay, $1 each money order, so that's $5 every month that I need to buy or spend or use so that I can pay other people, pay my bills. That goes on all year as well. So that's 12 months, $5 I spent on money orders. That's a total of $60 a year. When I combine those $60 with the $240 I spent cashing my checks, that's a whopping $300 that I could have used on something else. Why? Because I don't have a bank account. Because I don't have a checking account. So, all right. So the whole year passed. I spent $300, and I got smart. I went and opened a bank account, and unfortunately, this bank has a monthly fee. Okay. So this month I went to is going to charge me $5 a month so that I can have my money in their bank. So $5 a month for 12 months, that's a total of $60. $60 I am paying Bank X so I can have my money there. So that my company, my boss, my payroll can go straight to that bank, or I can go and deposit that check to that bank. So that's $60. Now, because I don't have, it's a checking account, so they're going to provide me with a box of checks. Yes, I could use my ATM card, but remember when I said earlier what type of bills I was going to pay? Yes, I could probably pay the light bill online. I could probably pay the car payment online. But guess what? I probably will not be able to pay my rent online. That one, my landlord wants a check. So with this box of checks, I can write out a check to pay for my rent. And my babysitter, well, I can't, I can't pay with an ATM card, and I don't really want to give her cash, or so I'm going to write out a check. I don't know, something like that. So those checks will come in handy. So the box of checks is going to be $18. So when I combine the $60 I had spent for the year plus the $18 of checks, that's a total of $78 I've spent all year. So when I subtract or compare those $78 with the $300, that is going to be a savings of $222. So isn't that awesome? You can use those $222 for a really nice meal, a small get-together party, immediate family only. Do not invite other people because of the times that we're in. We want to avoid social gatherings, of course. Or you could just save that money for Christmas or something else. Okay? Now, there are additional benefits of having a bank. The internet, you can have internet access to your bank 24 hours a day, 7 days a week. When you do this, you can actually, you're creating, like I mentioned earlier, a great relationship with the bank. So you will be able to have good credentials for loan applications with responsible use. That means that your bank is already monitoring or tracking your activity with the bank. So that might be good. Hopefully it's a good relationship. And that way it helps out the decision making on the loans that you applied for. And once again, no worries about cash being lost or stolen. Now, when I have my money in a bank or a savings account, my bank is going to be paying me interest. Interest is a percentage of your balance that the bank pays you for keeping your money at the bank. So what they are doing is paying you to have your money there. Before the interest came this month, I had $76, so the bank now paid me $1 interest. I know it's not a lot, but it's still $1 I did not have. So now I have $1 extra in my bank account. So now I have $77. And like I mentioned earlier, different banks have different interest rates. Credit unions also have different interest rates. They might be even higher. You might even get $2 instead of the $1. So shop around, look for, compare different banks and credit unions to see which one best fits your needs. There are also different types of accounts called non-deposit accounts. Non-deposit accounts includes stocks, bonds, and mutual funds. These are, however, not FDIC insured. They are not protected. Therefore, you may risk losing your investment. So good luck with that and be careful with that. Now, information that we provide to our banks, it should be maintained private. Under federal law, financial institutions must keep personal financial information private. But you can stop or opt out of some information being shared because banks do share this information with other financial institutions. In order for them to stop sharing the information, you can always call this number 1-888-5-OPT-OUT-567. That's 1-888-567-8688. So you can be removed from a list so that you don't receive pre-screened offers. We all get those in our mail, or now even emails, where you are pre-qualified, pre-selected, pre-approved, all of that. So the reason that's happening is because our banks are providing our information to these other agencies or companies. So that is how we're getting that information. So, but not everything can be opt out completely. We cannot, remain hidden or secret forever. Financial companies can provide information to firms promoting the company's products or partner products. Transaction records to firms providing data processing, mailing services for the company, information about you in response to court orders, and they can also provide your payment history to credit bureaus. Let's take a look at some of the staff or employees that work at these banks. They are going to include our customer service representative. Our customer service representative is that person who is there to greet us, to say hello, to answer any questions that we might have. They will provide us guidance as to where to go, who to talk to, based on what we're needing on that day. Then we also have the tellers. The teller is that person who is behind the counter, who is handling your money. Whether you are there to deposit money, they will take your money and put it into your account, or if you are there to withdraw money, they will give you the cash or the money that you are requesting from your account. We also have the loan officer, and the loan officer, I believe, is a person that we need to be nicest to. So this is a person who is going to accept or approve or deny our loan application. So won't hurt to just be extra friendly with that person. Just share that smile, okay? So branch manager. A branch manager is that person, of course, that is in charge of the organization or the branch of the bank. So they oversee everything, make sure that all services are being provided adequately and accordingly, okay? So some final key points to remember. Ask for help if you do not know whom to talk to at a bank. Ask questions until you are clear on all the information. Remember, ladies and gentlemen, and this goes for everything, do not sign anything you do not understand, ever. Never sign something that you have not read or that you don't understand. Always ask for written information to take home to review. Shop around for the best bank for you to meet your financial needs. And in conclusion, you have learned about types of insured financial institutions, basic banking terms, how to open and maintain a bank account, differences between banks and check cashing services, types of accounts, types of banking services, and we also described a little bit in detail bank employees and their jobs. I thank you for watching. My name is Guillermo Bermudez. You may reach me at 956-794-6500. My email is guillermo.bermudez@southtexasworkforce.org. With that, my friends, I leave you and I wish you all a great day. See you back again with another presentation of one of our job readiness classes. Thank you so much for joining. Have a great day.